Good evening, everyone. My name is Sam Zaratoshti, and I'm going to be your host tonight. Thank you, everyone, for joining us, and thank you to our speakers who will introduce momentarily for joining us. And thank you in advance for what I'm sure will be a very knowledge-filled and just great overall webinar. But to get things started, I'm going to go over a few quick housekeeping things before we let the speakers introduce themselves and get into our webinar. So welcome. Thank you for joining LADCR this evening for this webinar on cannabis funding and investments. Tonight's topic is focused on cannabis investor Q&A. The Department of Cannabis Regulation has officially launched the Business Licensing and Compliance Assistance Program, also known as the BLC program, to assist social equity applicants in the city of Los Angeles with obtaining a commercial cannabis license and operating a successful cannabis business. Some of the program highlights are self-directed online education on topics related to running a successful cannabis business through our new learning management system, live webinars with subject matter experts like this one, checklists, worksheets, and other management tools. Please visit cannabis.lacity.org for more announcements on our ever-expanding BLC program. Now some quick housekeeping rules. Please note this webinar is being recorded and can be viewed after the edited process on DCR's website. You will be muted with cameras off for the duration of the webinar. This means that your camera and audio functions will not be available to you during the session. However, you will be able to see and hear all the panelists. There is an open chat box where you can interact with one another or for networking or comment on the information. Please ask questions about the subject matter in the Q&A box. We are gathering them and will be responding to as many of your questions during the Q&A session towards the last 20 minutes of the webinar. You are encouraged to utilize the Q&A box at the bottom pane of your Zoom screen. Chat is available for interaction with other participants. If you use the Q&A box for questions, everyone will be able to see the question when they are answered. Friendly reminder, use caution when sharing personal information in a public forum and keep your questions focused on tonight's topic. Quick disclaimers, the City of Los Angeles Department of Cannabis Regulation does not endorse specific companies or products. The content presented here is for informational purposes only. This content was not created by the Department of Cannabis Regulation or the City of Los Angeles and is for informational purposes only. This information is subject to change and does not replace or supersede the Los Angeles Municipal Code, nor constitute legal advice. You can call 213-978-078 during business hours, Monday through Thursday, 10 a.m. to 4 p.m. to speak to a DCR representative. Thanks. And just a quick reminder, if you have any questions throughout this process, throughout the webinar, please drop them in the Q&A box. And we'll get to as many as we can during the Q&A session with time permitted, obviously. And yeah, that's pretty much it for the housekeeping rules and disclaimers. And now I quickly want to introduce our speakers. And first off, I actually have like a personal relationship with this speaker going back like, 6-7 years. He was actually the first investor that ever invested into one of my companies. So it's really awesome because he's also someone that just gave me more knowledge than really anyone else as far as business and fundraising goes. And I just think it's awesome that he's willing to get on here. But Patrick Ray has been investing in the cannabis industry since 2014 when he founded Canopy Boulder, the cannabis industry's leading, and if I'm not mistaken, first cannabis-focused business accelerator. Patrick managed 5 funds that invested into 115 companies. I was actually fortunate enough to be one of those companies, and I've gained a tremendous amount of knowledge from Patrick, who's always been an amazing mentor and advisor. As far as cannabis goes, I think Patrick is one of the most experienced investors, and he is currently managing one of the larger funds in the industry, Poseidon. Prior to cannabis, Patrick spent 15 years in the natural food space, working for a venture firm and eventually leading the sale of a portfolio company. So his experience is vast, and we're lucky to have him. And yeah, Patrick, if you want to, quickly introduce yourself, feel free to unmute yourself and yeah, take it away.
Awesome. Well, hey, Sam, thanks for those kind words. It's always great to see you. And I remember back to, gosh, I think it was like 2015 or 16 when we first started talking about your entrepreneurial journey. And yeah, I'm just excited to be here. And, I'm proud to be a part of uh, your journey in the cannabis industry. So I don't think I have too much more to say about myself besides I'm here to help. This is not a success for me in this webinar uh, is when the attendees are going to have their questions answered. So feel free, please do submit as many of your questions as possible. I want to serve your needs, and that will be success to me. As Sam said, I've been involved in the cannabis industry since 2013. I feel very strongly we stand on the shoulders of giants who came before us, and that cannabis can be a great agent of social change. Leaving a positive legacy on the industry and helping it become what it should be is part of my personal motivation, and I've done that through what I can do, which is raise funds from investors into investment fund structures and deploy that into the best and the brightest entrepreneurs in the industry. I've done that. I did that at Canopy Boulder, where I invested in over 100 companies, mostly ancillary products and services. And now I continue on with Poseidon. Poseidon is a venture capital fund that's been in industry since the same time, 2013, 14. And they've invested in a bunch of companies, 60, 70 different companies. And now I head up a new fund where I'm investing in both licensed operators, early stage licensed operators, and ancillary products and services companies. So we like single state operators. Typically, we like vertically integrated, at least cultivation and retail, but every market's different. California's different, right? For a lot of reasons. We're flexible, and we want to support our founders as much as possible. So that's my story.
That's awesome. Thank you so much, Patrick. And, thank you again for joining us. I'm really excited for this. I think I'm going to learn a lot along with our, attendees. So, thank you. And our next speaker, just to get into a quick introduction, she's someone that, I had the pleasure of, hearing speak, a few years ago. And I feel like I always see her, I always see her face online, headlining and keynoting different seminars and webinars and stuff. And she's just she's a wealth of knowledge, and she's a bundle of energy, and it's really really awesome to have her. I think that this is just going to be a great webinar. But Jean Sullivan has been investing into the tech industry since 1990, where she co-founded a venture capital fund. Jean began focusing her investment efforts on the cannabis industry around 2014, 2015, and she currently serves as the CIO of ArcView Ventures and the co-founder of the ArcView Collective Fund. Jean is highly sought after as a speaker and advisor. She has spoken at conferences all over the globe and heard pitches from countless companies. Jean has been a member of the Women's Leadership Board at the Harvard Kennedy School and is an Athena Entrepreneur Fellow at Barnard College. She also serves as on the global board of trustees of Astia Funding. And yes, Jean, thank you so much for taking time. I know you're on the East Coast, so it's a little bit later for you, but we really appreciate it. And if you want to, share a few words, please go ahead.
Hey, Sam, that's all right. Don't you know the city never sleeps? So I am proud that I raced up here from way downtown Manhattan, and because we had a gathering of over 175 social equity applicants who are aiming to find their way in the new exciting world that's happened for us here on the East Coast and in New York, New Jersey, Connecticut. So in case you didn't know it, the ocean wave has rolled toward the Northeast, and we are thrilled to be swimming in this fabulous ocean. I love sharing my story because it being in the cannabis industry I have found my way to such a passion. My mom used to tell me I was a late bloomer. So I don't mind the fact that now I have truly found a passion that I plan to stay in for the rest of my life. It's so fascinating to me. But here's the silly part of my story. I as you heard from Sam, have been a longtime venture capital investor. We had a nice sized tech fund here in New York City. And I've really dedicated myself for many, many years as an investor. I've invested over 150 enterprise level kinds of companies, tech, software as a service, those kinds of companies. And in 2014, I rolled off my fund. That was the year New York passed the Compassionate Care Act. And we got involved as investors, my husband as an operator in one. Did you know there's only 10 licenses in the entire state of New York? We got to grow, extract, and have 4 dispensaries, but imagine only 40 drugstores in an entire state of 20 million people, all medical. And get this, no flower, no edibles. I like to say, no nothing. Go figure. So it's been pretty crazy. And as you all know, New York has had a really bad history. The Rockefeller drug laws, stop and frisk, all kinds of horrible things. So I said, I better learn this stuff. I didn't understand the war on drugs. And then I realized, I did the research. What? We still invest 600,000, mostly brown and black men and boys. I said, what the hell? But then, since I was a long time investor in the tech world, I said, this is the next big thing. And it took me about 2 seconds to figure that one out. And I said, I better learn this stuff. So I started going to the big conferences and went to the big, incredible conference in Vegas. And Troy Dayton found me. He was one of those great pioneers that he and Steve D'Angelo founded ArcView 12 years ago. And Troy found me and he put the net over my head and said, I need you. I need classically trained investors. Help me find investors, help me find great companies. And so that's how it happened for me. I said, I'm yours. So I really have been learning the business. You can't know too much about this fabulous and complicated industry, all the regulatory issues, all the craziness. I have met incredible operators, license holders, licensed people in license pursuit. I've gone to many, many dispensaries throughout the US, certainly, many grow operations, testing operations, because we always did tours as part of this fabulous ArcView event world. Well, imagine, this, that the large community of investors as part of that world, they invested more than $300 million in every cannabis company that there was or is, but they never participated as a principal, as an investor themselves. So enter COVID. How do you keep having 5 fabulous events a year? That's one way I know Patrick so well. I've gotten a chance to introduce him, to be part of what he's built, and I'm in awe, Patrick, of all these wonderful companies that you've educated and supported and connected. So basically, COVID hit, we can't do the live events. So we, every week, and you all are invited, we don't charge for them, have had some fabulous educational webinars and stood up ArcView into 3 different lines of business: a real FINRA-based broker-dealer, raising capital for people, a consulting arm, because everybody asks us, hey, what do I do? And then I'm part of building something called ArcView Ventures, where we have an angel fund. We've made 17 investments. Patrick and I have co-invested in some of those. It's fascinating to be looking at deals and meeting unbelievable CEOs and entrepreneurs. And then we're trying to stand up more opportunities for people to invest. And guess what? We are now going to start doing IRL. I never even knew what the hell that meant until COVID. So some in real life gatherings again are going to start up, and people can't wait to convene in person. And so we're thrilled to do that. And so I couldn't be happier to be here today to share the knowledge and wisdom, my screw ups and successes, aiming to leverage that in this fabulous sector. So Sam, take it away. Let's go.
That's awesome. Thank you, Gene, and thank you both again for taking time to be here. We all really appreciate it, and yeah, I'm excited. So we're gonna jump into our questions. We have a few preset questions, and then we'll get into the audience Q&A. But the first question is, list the top 3 traits you look for in a cannabis entrepreneur. And I think this is a question that I'd love to hear both your responses. And for this one, and to start, obviously, Patrick, I think we have to go ladies first. So Gene, please take it away. List the
Very
top 3
cool.
traits you look for in a cannabis entrepreneur.
All right, thank you for that, Sam. Now look, as you build your business, we use a one-liner that really has guided me all my investing life. Do you know what to do and how to do it? And hey, you're not born knowing that. So surround yourself with people that can help you. And there's so many experienced operators, entrepreneurs, and people, mentors, advisors, people who want to help. So go find those people. I think that's critical. So that is really number one. Number 2, I have developed this very smarmy webinar that I've done for years. I did it for you, Patrick. I call it 5 stupid things that entrepreneurs do over and over again. Now, let me tell you something. I'm quick to also give the chart of the 5 incredibly stupid things that investors do. You need to know what those are. But for me, the number 1 aspect that I find people have no idea how to package themselves, how to really articulate their vision and what they're doing. Often it's easy to get hung up on the features and functions. I want to hear the business of the business. So give us that. Tell us how you are going to execute. And then the third thing that's critical to me, know your numbers. If I ask you, what's your aspirational pre-money valuation? You give me a blank stare. Guess what? You got this meeting, you might not get the next meeting, because I want you to be a good steward of our money. I want you to know what kind of capital is needed. I want to know what your OpEx is. And if you say to me, this is the last last round I'm raising, I will have to just do something to you. Like you won't get the next meeting. Never say that to an investor, because we want you to scale the business. What about global expansion? What about people and all that? So when you say that to me, that tells me you don't know what you're doing. And so those are some of the top 3 things that are on my mind. Patrick, over to you. Illuminate our brains.
So, the question of what are the top 3 traits that I look for in a cannabis entrepreneur, and I'll go in a slightly different direction, alignment. So I want to make sure we share the same goals. As an investor who manages other people's money, it's not my money. I'm not just throwing it around. I've like a fiduciary responsibility to generate the return in the timeline that I have promised the investors. So if you see your business as a business you want to hand down to your kids, or something you want to run for the next 30 years, my timeline with what I'm doing right now is 8 years, and I'm looking for a 30% IRR return, which means that for ancillary products and services businesses, I'm looking for a 16x return on my invested capital. For licensed operations, I'm looking for a 5x. Okay, so these are my goals and the goals of the fund. So if an entrepreneur is like not in line, or their plan doesn't meet those expectations, even if it's a great business, you're a great entrepreneur, we can't invest in your company, right? So we have to go in with an understanding we can meet our goals and we are in alignment with the founders when we start. The second thing I look for as a trait in a cannabis entrepreneur is a strong character. Despite the tens of thousands we will pay in legal fees to document our investment in you and your company, honestly, the paper is worthless if the parties involved lack integrity and character. And that is a difficult thing to assess. And it's why your investors want to have multiple meetings with you. They want to give you micro, assignments, and to see you execute on those assignments and come back with experience. It may make you feel like you're just being put through the ringer, but the truth is it's a process where we're assessing your character, and we might get that wrong. And then the third trait that I look for in a cannabis entrepreneur is a right to win. You know, we're not, no investors are not looking to invest in normal. They're not looking to invest in average. They're looking to invest in individuals and teams that have an unfair advantage and a right to win that is greater than the competition. And, you know, it doesn't matter your gender, your race, your age, where you're from. It is very simply the right to win. And as a founder, you need to know how to communicate that. So
Yeah,
those are
let
my
me-
3 traits.
Let me press on that, Patrick, that's important. And you know what? I just learned that in the last few years to look for that quality, that fire in the belly, that you know that that CEO is going to do everything to create success. And
Mhm.
I missed a few along the way because I didn't really observe that as
Mm.
strongly as needed. And
Mm.
wow, I really look for that too. That is critical.
Yeah, absolutely.
That's awesome. Thank you both for sharing. That was awesome. And definitely glad this is recorded. Second question, or kind of prompt is you know, what would be advice for cannabis entrepreneurs entering the industry? And I think that's more so the legal side of the industry, because obviously we're speaking with the social equity participants in Los Angeles. So for the most part, these guys have like been around and you know, cannabis. But I think the question is more so advice on entering the legal industry.
Well, I'll lead off, but certainly add in, Patrick. You know, this is what I hear a lot. See if you do too, Patrick. I'll I'll say to them all the time, "Who's your lawyer?" And they might say, "Oh, it's my wife's brother." Well, what does he know? He knows real estate. Okay, wrong. I am leading you to smart lawyers who understand securities law, are going to get you into the right vehicle and are going to make sure they understand the regs. And if they're the ones that are going to write your application, they know what they're doing. And so I think it is critical to surround yourself with the right kinds of resources. I think it's, if you're not sharp on the numbers, find yourself a temp CFO or some smart person that can be at your side, and they can even speak for you at the meetings, but you better learn the numbers from them. So I think those 2 resources are critical, but then I'm looking, and I know Patrick's looking at who else is on your team, because that's important. And we don't like a 1-person band. It's too hard. It's way too hard. Plus you're the Lone Ranger trying to figure it all out yourself. So you have to surround yourself with that team. And then I think, what's critical too on advice, if you're pitching, you better know your audience. Is this investor audience? Is this angel? Is this maybe early stage institutional investor like Patrick and I represent? Do we want what you have? Are you the right geography? Are the right subject matter? You heard what Patrick wants, what he's seeking. And you heard under Canopy Boulder what he wanted. Did you go to him and say, I have a life science company or a license? You have to understand what our focus is. And so that's critical. And that's all find outable. It's on our website. It's people who know us or ping us and find out. I'll stop there. Jump in, Patrick.
Yeah, I'd say the piece of advice I'd give is, especially for this audience, is keep it simple, keep it clean. There's a sort of Los Angeles cannabis industry distortion field, and it is a product of, you know, a very vibrant illicit market. And you know, I can't speak for all investors, but the investors that, you know, I know that are investing in the industry right now, they're not looking for, you know, complex accounting schemes or financial engineering. They're looking for businesses that are simple, that have a clear path to exit, because they're investors, right? You don't want to ever buy a stock that you can't ever get a return on, right? I mean, you never want to make an investment where you're like, the chances of getting your money back and more are 0 to none, right? And everything that's done outside of a very simple box, out of the box approach has the potential to complicate that exit. So my advice specifically for this group would be to keep it simple. You know, like I know a lot of the business opportunity in the Los Angeles area is focused on dispensaries and opening up dispensaries. There's a shortage of legal dispensaries. There's an oversupply of illicit market dispensaries. We got to fix that. The way that we fix that is that we set up businesses that more investors can understand, that look lower risk, that appear to have lower risk. When you get in there and you're like, hey, I'm running like 5 different businesses and I got one over here and I got one over here and these guys are involved, but you don't want to meet them, like, I'm out, right? I want you to be focused, right? I want to know that you are focusing on a simple dispensary business and you're going to keep your blinders on and do what you need to make this business successful and keep it legal. Because when you do that, you become a target for acquisition, which is what, you know, I think we all want to generate at some point, is some type of return for ourselves and for our partners. Anything that muddies the waters there and makes things more complex is going to limit your exit, your sale opportunities. So keep it simple.
Awesome. Thank you both. Next question. Are there certain legal structures better, more suited for capital investment? Gene, do you want to take that one to start? I see you both nodding.
Yeah, that's a good one. Here's why. Look, I'm in New York City. We on the East Coast hate these safes. We hate them. They're a West Coast investment idea, you know, by Y Combinator. And I think they're silly, and they're silly for many reasons. We only would invest in a C corporation. It's a problem for an institution, not necessarily a high net worth investor, angel, to invest in an LLC. They often do. We don't do that. So I think it's important to start right. But let me give you another idea that I don't hear too many people talking about, except the smartest license holders, and we've invested in a few of these. If you're going to build multiple licenses, we like to see a top co. So we as an investor are investing in the top co, not just down in the subsidiaries. So we love that. So we've made an investment in a fabulous woman license holder in Massachusetts at the top co. She's now building out her cultivation. So we're investing again at the top co. She's coming into New Jersey and New York. So again, our investments at the top co. So we participate as she grows. A lot of people along the way were not knowledgeable enough to do that. And they're trying to reverse engineer that now, which is hard. So again, back to what I said earlier, having the smartest like legal help to help you structure this from the start will save you a pain later. So that's just one idea. But another idea I'd love to share is this. Look, a lot of you do have that first step or provisional license. Guess what? People want to know you now because you've reached a tipping point. It's exciting. That's when the door is much more open by investors. What's hard is what we're going through right now in New York. We're pre-regs even, and people out there in license pursuit, trying to get that first, several $100s to build the license, maybe hire the team, pay your lawyer or pay your resources. That's hard because there's no license and it's going to be very competitive. So what do you do there? Well, here's a little trick. This is what we did back in 2014. We were raising, I'll make up these numbers, but it's close to actual, raising 6 million, but we then only took down 10% of what we did for operating capital and had a call for cash upon getting that license. So there's various machinations you can do. Again, getting good guidance is the way to go. Over to you, Patrick.
Thank you so much, Gene and Patrick. Before we jump to you, Gene, can you just correct me if I'm wrong, but angel investors are willing to invest into C corps as well as LLCs. It's just
They would-
institutional investors.
Yes, they would rather do that, but they are willing to invest in an LLC. Whereas as an institution, we don't like that. We have to go through some hoops to do that.
Cool. Thank you so much. Patrick, please go ahead.
Yeah, so the primary structures for businesses are in the industry are going to be LLCs and C corps, right? And they're different. LLCs have units and C corps have shares, right? You know, you can, you know, a lot of accountants and business coaches will say, hey, just set up an LLC. It's simple. You can do it in like 5 minutes. And they're totally right. It's great when it's like, and this is Gene's line, it's like you, your co-founder, a pitch deck, and a dog in the corner, right? So to steal that from
Here it
Gene.
is, Patrick, a team, a PowerPoint, a team, a dream, a PowerPoint, and a dog.
Yeah, a team. So that's great when you're starting up because you can, you know, get a credit card in the name of the account, open up a bank account for the LLC, get a credit card, put all your expenses on the credit card. It makes it easy to track. And for when it's just you and your co-founder like figuring it out, that's the best structure. But you got to understand, it does limit your ability to raise capital from more seasoned funds who are going to want to only invest in C corps. But as an LLC, one of your easy options in raising money is to raise money through what's called a convertible note, which is essentially a loan that at a certain time converts into equity, and certain conditions would convert into equity. And there's a lot of resources online to pull down like templates for convertible notes. Cooley Go is a great resource for that. Cooley is a big law firm. They've open sourced all their legal documents. Great for entrepreneurs to go get these documents. But at the same time, I always encourage you, and you must have lawyers to help you navigate these fundraisers. You don't want to be the person at the table without a lawyer behind them. You will be taken advantage of by some of the, you know, many investors out there. Maybe they're not even intentionally taking advantage of you, but you're allowing yourself to be taken advantage by not having that good legal counsel. And I don't want to gloss over the fact that lawyers are expensive. Talk about inflation, the cost for lawyers going up. But convertible notes are one of the most inexpensive ways from a legal cost standpoint to raise money. Those can get you going. I don't like safes either as an investor, but you know, they're a product of sort of angel investment and quick investments in, you know, primarily out of California, Silicon Valley. So anyway, so typically when we come in, we want to invest in C corps, right? So you're going to have to convert, not a huge challenging process. Takes a couple hours paralegal time, not a big expense. But once you're a C corp, typically institutional investors, venture investors, they're going to want to invest in own shares. So they're going to want to do what's called a priced equity round, and that can be expensive. So when you want to raise a priced equity round as a C corp, you usually want to be able to raise at least a couple $1 million, right? Because often the legal costs for raising that round of the investor and you is going to be paid out of the amount raised in that round. So the two primary structures, LLCs, you can do a convertible note, you can do a safe agreement. C corp, you can still do convertible notes and safe agreements, but you can also do priced equity rounds.
Yes, I'd like to add to that. So here's what I'm seeing a lot of. You know, make a star by this note because this is important. I'm so glad, Patrick, you did bring up the convertible note, and we're used to doing those. And yes, we do plenty of those. But often when you do a note, you do kind of signal what's called a valuation cap, which isn't a true valuation, but it's signaling this is what we believe our value is. Now, let me tell you something. If you tell me a great big fat number that I think is way too expensive. It is a complete turnoff. Remember my line, know what to do and how to do it. So what we favor is somebody who does what I call a win-win equity round. Like Patrick also said, then you can sell shares in your C Corp. We take our wallet out for a well-priced equity round at the early stage. You win as the investor, you win as the CEO and team. That's what we like the most. And it doesn't always happen that way, but when it does, it's a beautiful thing. And so we really favor that. So be smart if you are going to do a convertible note and you are setting this valuation cap. By the way, we can defy that. You might set a fancy number. Let me make it up. Let's say you're raising 2 million. You tell me it's a 15 million valuation cap. Well, guess what? When you do that equity round down the road, I can bid underneath that or price it underneath that. I don't have to stick to that. There's no rules that say I have to do that. So just be aware, those are some of the tricks of the trade.
Awesome. Thank you both so much. That was awesome. And I think, you know, just in the spirit of the time we have, we already have a few great audience questions. And I know we have a few more preset questions that you guys prepared for, but, you know, not to throw a curveball, but I'd love to jump into these.
Sure.
Just to see
Go
if you
for it,
guys,
Sam.
you know, have anything, you know, you want to share in regards to the questions that, you know, might help not only the person that asked, but, you know, the entire group. But the first question is from Beauty, and it says, how can we give those numbers with any certainty? My investors seem to want more of a sure return. There are few deductions for retail practice. In my opinion, there are very few investors for the startup in the space. How do we reach angel investors like the two panelists with limited support?
Hey, Patrick, you do such a disciplined process on that. Speak to that because it is interesting.
Which part?
How
how do
about
they-
looking at the returns and the IRR and all
Yeah.
that?
Yeah. So I think, well, first off, I'd say is if you have an investor prospect who's looking for a sure thing, they should be buying a money, you know, like an ETF, right? They probably shouldn't be investing in cannabis, which is an emerging market. It's high risk, it's expensive, right? But it can have a high return if executed well. You know, so you hear the classic like 1 in 10 businesses succeed, 9 in 10 business startups fail. It really is true. And again, this is just across all industries. So I would encourage you when you're talking to investors to qualify them, to ask questions of them first before you launch in to your pitch, so that you make sure that you have alignment, right? That what you're doing and your goals and expectation and vision are shared and of interest to investor, because who wants to go and like do their whole pitch and have the investor then say, well, you know, this really isn't probably right for me. Well, then you just wasted a bunch of time. You could have been doing something else, could have spending time with your kids or having a great meal, enjoying some cannabis, right? And having a better life, or talking to another investor. So that's what I'd say at first. The other thing, the way you can make investments more appealing for cannabis investments, more appealing for investors, is to set your valuation at an appropriate level. There are just too many decks, too many entrepreneurs that come to us that have little to no traction, and they want 10, 15, $20 million valuations for these businesses that haven't generated a dollar yet. And the truth is, licensed operations are exiting for between 1 and 2 times sales and 4 to 6 times EBITDA. So write that down. We see it from small businesses in Colorado to licensed operations in California to $100 million vertically integrated operations in Massachusetts, right? So you got to understand that the investors are risking their capital with you, and that risk needs to be associated with return. So if you're going to build a $100 million business, right, you need to start with a fair valuation so that that investor partner that's joining you early in this journey and taking a whole lot of risk with their capital is going to see the return that they should receive by taking that risk, right? So you need to think about things like exit multiples like yours. How big will your business grow? How much, and at that point of exit, what will the revenues be? And then you multiply that by the multiple of sales, maybe 1 to 2 times sales for a licensed business. And then what's that enterprise value? Then you need to subtract out any debt you have, right? You need to think about how much more money you're going to need to raise and where that's going to come from, and thus how much dilution, your initial investors are going to have to take. So if I invest in early and I own 10%, we make a deal and I own 10% of your company, often by the time you get to exit, I might own 2 or 3 because you've had to raise so much money because cannabis is so capital intensive. I only own 2%, right? So if you sell for $100 million, I get $2 million, right? How much did I invest? Did you ask me to invest $1 million? So over 5, 6, 7 years, right? It takes you to exit. I made 2 times my money. In that same amount of time, there's any number of investments that I could have put my money into that I could have done much, much better. Right? So you got to make sure when you're setting those valuations that you're thinking about the return profile of the investors coming in, because no one really wants to upset the people that come and partner with them, trust in them, and take that risk with them. They want to reward them. But to make sure that you're going to reward that investor, that risk capital, you need to have a bit of a plan in hand and have a reasonable understanding and expectation of what your company and how it will be valued when it's sold. And so I will get off my soapbox now and toss to Sam or Gene, but that's an important part. And there's actually, we did a Medium post, Poseidon did. So if you type in Medium Poseidon method, you will see an entire article written by one of our partners about how businesses and how we go about valuing businesses in the cannabis industry.
See, that's so cool that you shared that notion, because now guess what? You can go to Patrick and say, hey, I meet your metrics. I've got all, and you know what? We look for you to articulate these things. And if you feel kind of sounds like a big ordeal, this can be demystified. There's plenty of smart, financially focused, financially savvy people you can pull at your side to get this down pat. I share all the time. This is not calculus. It's not algebra. It is simple multiplication, division, percentages. Do not be afraid of this math. I see that for years and years. And it's very manageable once you learn the tricks, just like anything.
Hey, there was one little element of the question related to deductions for retail. And so I thought it would be worth just saying something really briefly on that. It is retail is, dispensaries are hit by IRS code 280E more so than I think any of the other types of businesses in the cannabis industry. On the other hand, they're often the least expensive to get up and going, but they're like, they have a lot of expenses. You got high rent, you got a lot of employee costs, right? And those are things that you can't deduct, right, from your taxes when you include IRS code 280E. So typically, we like to see cultivation paired up with retail, right? Now, maybe not in California right now because cultivation is in such a mess right now, but cultivation paired with retail is a good combination of assets for a cannabis entrepreneur. 50% of your sales in your dispensary are going to be flower, right? So if you can control the supply of flower into your store, you can get great margins on that. So it's really, people say it's like 1 + 1 = 3. It's actually 1 + 1 = 6, right? Because and I'll quote Colorado. In Colorado, you can get about $250 per pound at wholesale profit, right? $250 per pound profit. If you take that same pound in your retail stores, you can make $1,500 per pound profit. right? So it's really 1 + 1 = 6. Now, the other nice thing about the combination of those two assets, cultivation and retail, is that cultivation, you can do a lot of deductions. So there's a lot of cost of goods there, right? So the combination of two, you can sort of mitigate 280E risk and implications onto your financial model, and that's why we like those two combinations. But in California right now, there's a huge oversupply of cultivation. There's an undersupply of legal retail. If you've got a strategy, I encourage you to go after retail. And if you get that up and going and you have some operating history, you might start looking around to pick up some cultivations that are on the cheap, right? Because now you have an operating business and you have a better chance of getting a loan, right? Because you have operating history and they can look at your books and say, okay, I can loan you this much and you can cover it, right? And then you can get out a loan and acquire cultivation, and then you got the stacked assets.
Awesome. Thank you both so much. And I just want to quickly reiterate one of the first points Patrick made. Doing your due diligence on investors and making sure you're talking to the right person. As someone that has not so successfully tried to fundraise for a couple of years, in the past. That was my biggest mistake, and it not only wastes a lot of time, but when you figure out that you're talking to the wrong person, it's just like, it's demoralizing. Like, dang, I just wasted all that time hoping like I at least had a shot when I really had no shot. And one thing I just want to warn everyone of is that investors will sometimes lead you on because you're on the ground, like what's going on, you're talking to your peers, you're talking to other people, you're on these webinars, and it's a great way for them to kind of extract knowledge from you. So that's just one thing I totally agreed with, and it really resonated with me because I wasted a lot of time, and definitely it was demoralizing. But yeah, thank you both so much for answering that, and I hope Beauty, that answered your question. And now we're going to move on to the next question. Alexis asked, hello, thank you for this presentation. With 51% of equity wrapped up in a tier 2 SEP, social equity permit, how can we get the capital we need? We cannot get capital with 51% wrapped. We are fully operational and are struggling because there's no clear exit plan to provide to potential investors. This is a problem. Golden handcuffs. We need to be able to know when our 50% equity can be available.
Yeah, this is one of the problems with the social equity programs, is with the best intentions, the structure is set up in ways that can limit. The intention is to raise up and put at the front of the line and give advantage to, but sometimes it does just the opposite. It seems, and there was just a report that came out recently with the same conclusion, but Gene knows I've been sort of saying we're solving for the wrong problem here. We need to quit treating cannabis like it's nuclear material. We need to make it so that the cost of entry is low for entrepreneurs in the industry, not that it's high for anybody, right? I go back to some friends here in Colorado when they launched their first cannabis business in, I think, 2009. They went to the city business office and got a $24 business license, and they opened up their cannabis business. We need more of that, because when you have more of that, you have a free and open market, and the hurdles, the barriers to entry are much lower for everyone. So if you are the best operator and you have the right to win and you have high integrity and a great character and you're in alignment with your investors, there are fewer limitations, there's fewer costs to get to where you want to be, which is to be running your business and driving it towards a great result. So I'll again, that's my soapbox, but I'm glad to see that conversation is seemingly starting to be had out there. And I think all of us want this to be more open and free for us to be successful in.
So just to add to that, we are also standing here in New York on all the issues and the shoulders of California and the beautiful brands and fabulous operations that have been standing up now for many years. And so we're trying to find our way. And I shared earlier at the top of the conversation, we only have 10 license owners here. And now with our new program, it is the goal to have 50% as a baseline be social equity licenses. Can that happen? Who knows? But not to compare, but just to share this. So we've just announced that the state knows this is hard, and we've produced a green bond fund of $200 million that are going to go to social equity applicants. I think that's great. Will it work? I don't know. I hope so, because if not, the whole program's going to be a failure, and who wants that? We've announced a mentorship program so that if you are coming in, let's say as a new license, let's say you own licenses in other states, you can come in and mentor the social equity applicants if they need and want that. So there's all kinds of complications in this very harsh regulatory world. It's hard. It's darn hard. But I really had fun talking to the terrific group that's sponsoring this very webinar. California knows this, and I understand that you are creating some of these great programs too. That's what's needed. Access to funding, simplicity, like Patrick has said more than once on what's going on, the ability to get that license over time without draconian measures around that and regulatory, problems. So, let's get smart with each other and help each other capitalize on the mistakes and issues from each of the states, learn from that, and build programs that can really work for wealth and wellness. That's what we want. That's what we want for everybody playing in this market. And, great products, great brands, and wealth for all social equity applicants to grow over time and build beautiful businesses and products. Wouldn't that be a great thing? And that's why Patrick and I are dedicated to giving our ideas and input and experience, for making this successful.
Yeah, this is not cannabis. Is the reason people perceive it as dangerous is because it's been labeled dangerous by people in power, and it's not. It's not. It's safer than alcohol. There are. I always say, like, you could kill yourself drinking too much water, right? There's so many things out there that are much more dangerous than cannabis, and we need to stop treating it as it's dangerous. We need to sort of open up the market. We need to get out of the way of entrepreneurs. We need to support our constituents, and make it such that they can raise money, that there aren't limitations. And I think everybody's trying to work with the best intentions, but they're solving for the wrong problems. The problem is the overregulation and overtaxation of cannabis, period. It's not anything else. Once we solve for that problem, I think we will see a much more diverse, a much healthier industry growing, and we'll see more capital flowing in. But until we stop treating it as dangerous, investors are not going to get involved, and it'll be harder for entrepreneurs to be successful. Full stop.
Awesome. Thank you both so much. And we are coming up to the close of this. We have a few more questions. I'm hoping to get at least 2 more quickly answered. We might only get to 1, unfortunately, but Annabelle asked, hello, I'm operating a new licensed delivery business in Los Angeles, looking for capital. Where do you advise me to look? Mm-hmm. Quick answers, if possible.
I think that you can go read up on all the press releases about capital raises and start building a database of funds and investors and start reaching out to them. When somebody says no, say, thank you for taking your time. Do you recommend I talk to anyone else? Another source is ArcView is a great organization, right? They're trying to connect entrepreneurs with investors. And then the last place I would say, go to AngelList.
Yeah.
AngelList has quite a few categories where there's cannabis investors listed, and just dig in. It's going to take time and energy, but also investment. I love LinkedIn. I'm a machine on that. And Gene knows I'm on it all the time, trying to find new people to talk to about this great opportunity that we have here. So,
And another idea is take a look at other delivery groups and connect with those people. You're probably only 1 degree of separation away. So find people who know them, befriend them, and say, would you be willing to give me some guidance? Maybe
Mhm.
they're up in NorCal and you're in SoCal, and maybe there's a same investor would take a look at you. So there's
Mhm.
way, I really believe in that networking ability, seeking counsel from others and seeking that advice. And I've learned this. There's two kinds of people who can help and people who want to help. They're not
Mhm.
always the same people.
Mhm.
And so just accept that and find the people who have both of those traits.
Hey, the last thing I'll add there is you have to ask yourself, do I need this capital to operate this business? Yeah, capital can make things go faster, but it comes with strings, right? And you need to think like, is this business, if you're going to have to raise $200,000 from an investor, how are you going to return back to them $2 million? And will your business grow to a point where you can do that reasonably? Now, some investors won't want a 10x, but an early stage investor in the cannabis industry probably will. If you can find somebody that wants to loan you money and you can develop a business that's going to be able to pay that loan back, great. Keep your equity, build it up. But delivery is a great business that doesn't necessarily always need a big infusion of capital to get started. You can start it, on your own.
Thank you both so much. That was awesome. And I think the last question we're gonna ask before we let you both give some closing remarks is and this one I think is directed specifically to Patrick. It says, what do you expect the sales to, or your sales to be at exit, and how many years out would this be?
For which business, Sam? Do we know who's asking that one?
It's either a
Oh, how do you
retail store.
know? Oh, how as a founder, how do you project out?
I think that's what he was asking. Yeah, I
Okay.
think it's like, I think it's like, and then the opposite side of the question is, as an investor, what are you looking for in those
Yeah,
projections? I think.
so this is a really simple, there's a really simple answer here. If you want to be an entrepreneur and be able to raise money and put together a pro forma, you need to know how to run that business. So my advice would be to go work for a business that's doing the same thing that you want to do. Educate, get the education, get in there, do the deliveries, work as a bud tender, right? Go work in a cultivation, work your way up, ask questions, be curious, like engage, immerse yourself in this industry. If you want to be a founder, sometimes you have to first be an employee and a student.
Awesome. Thank you so much. And then, yeah, I think that about wraps up, the Q&A, and just, with the time we have, I'm sure you guys could keep going for hours, but I know you guys are both extremely busy people. And Gene, I think it's like what, 10 o'clock over there. So,
We don't care. We never
we
sleep.
don't
and
sleep.
you know,
Yeah.
too.
I love it. I love it. Well, thank you both so much. And yeah, if you have any closing remarks, any last statements you'd like to make, anything you'd like to share with the audience, please feel free. And Patrick, sorry again, but we're gonna let Gene, go first.
So my favorite proverb, look, if you want to go fast, go alone. If you want to go far, go together. So reach for those resources and people around you. Build a little advisory board in those early days to give you input, and go far. Sending you great energy to do that. And connect with us on LinkedIn if you wish.
Thank
I
you so
share
much.
that. I share that point. I'm very accessible on LinkedIn. Reach out, happy to engage. What I'd say, the saying is ready, aim, fire, not fire, ready, aim, right? So hopefully from my comments, the takeaway will be that you need to prepare yourself to be successful. And, this is tough. It's not easy. If you think that being in the cannabis industry is going to be a cakewalk, you're wrong. Everything is harder. It's like they say when you build a house or you're doing some renovation, just take whatever the estimate is and double it. right? It's going to be twice as hard. It's going to take 2 times longer than you think, and it's going to take twice the capital that you want to raise. So, do your homework, become an expert, so that when you get in front of Jean Sullivan and she's asking you your questions, you feel very comfortable sitting at that table and answering every single question she has, and you want to ask her more, right? You bring it on, right? You got to be really confident in what you're doing, because this is a high risk move, it's a high risk industry, but there's also can be incredible returns. But it takes capital most of the time. And to get capital in this industry, you need to prove that you are the world's leading authority in what you're doing. So ready, aim, fire.
Awesome. That was amazing. Thank you both so much. And we ended right on time. So yeah, thank you both again for hopping on. We really appreciate it. And don't forget to register. So thank you to the speakers. Again, really appreciate it. For all of those in the audience, don't forget to register for the DCR's new series of virtual programming in March here. And I think the link should pop up in the chat box if it hasn't already. The events take place every Tuesday and Thursday at 6 p.m. on Zoom. Before you leave, please fill out a brief survey to share your experience tonight, which I believe is also in the chat box. Thank you all for attending. We look forward to seeing you again soon. And again, thank you so much to Patrick and Jean for coming on. I hope everyone learned as much as I did, because this is awesome. And thank you both again.